I'm joined now by Matt Bottomley, Managing Director of Equity Research at Canaccord Genuity. Matt, welcome back.
Thanks for having me.
Matt, the weakness in the cannabis space continues unabated. What's the upshot from where you sit?
Well, obviously, there's a lot to parse through in terms of what we've seen in earnings, what we've seen with negative headline news when it comes to facility licensing, guidance being pulled, things like that. So a lot of the names are in the penalty box right now, and this has been a sector since I've been covering it, that once you're in that box, it's very hard to get out of it. So I think the near-term sentiment in terms of potentially seeing more bullish nature come into the sector will be probably more in the U.S. names. Even those are trading down quite substantially because although the fundamentals, particularly on a pro forma basis, are more attractive than in Canada, the balance sheets are much weaker on average because they're not, on major U.S. exchanges. They're not able to raise capital at the same ease. We have some of the, chartered banks out of Canada here actually lending to some of the licensed producers. You're not going to see that anytime soon, at least in my view, south of the border. So I think right now in the Canadian sector, there's not a lot to be excited about until these new product forms and more retail dispensaries open up, particularly in Ontario. And I think on south of the border on the U.S. front, we might see some excitement in the space, maybe towards the end of the year, maybe a little bit before then, depending on what the print is this week during earnings and depending on what these companies do with their balance sheets.
Sure. Some of the larger incumbent companies have a combination of large debt issuances coming available in the next 2 to 3 years, plus looks like they've, come close to running out of cash, especially in a market where there aren't anybody who's willing to write a check. Do you think that there's an existential existence facing some of these companies?
Well, I think definitely if you look up the dozen or so, probably multiple dozen Canadian licensed producers, there might be some plays here where you have someone that has certain purchase orders in a province or certain brand recognition once brands start being a real thing that might be able to facilitate some M&A or maybe some merging of equals. But there's a lot of people that have, or a lot of companies, I should say, that have invested, whether it's 10 million, whether it's 50 million plus, into facilities that quite frankly, in my view, are going to be underutilized once all is said and done, because this is going to be a continued painful environment until we see more retail stores that are able to facilitate incremental users coming in. So I think that there's definitely names that have been trading off that potentially could be good value plays, and there's names that are trading off that probably have a long ways down further to go. So execution is going to be big across the LP front and just positioning in this market, because at the end of the day, it's fine if you can make 20,000, 50,000, 100,000 kilograms. The way that I'm looking at this sector is what's your market share going to be? What's your consumer mind share going to be once we start having vape pens and edibles, and once these things go from looking like a tobacco store where everything looks very illicit even in the legal sense to something that maybe looks a little more like the beer store or the LCBO. And that's going to take several years to play out, obviously, but I think we're going to get a first look of that come Q1 of 2020.
Okay, so US names like Trulieve, Curaleaf, Green Thumb Industries have obviously created a better runway for themselves in terms of the growth of revenue and the development of profit, we'll call it. There aren't any names in Canada who have a similar sort of trajectory, at least looking at the last few financials. Are there any Canadian names that you consider still a buy that might not be some of the default or more commonly known ones?
Well, I still think that the Canadian licensed producers as a group are still going to be leaders in many fronts when it comes to global expansion initiatives. The balance sheets are much stronger. You have Canopy with $3+ billion, maybe $4 billion of cash, depending on where these warrants may or may not come in. You have Kronos that has over $2.5 billion. So there's a lot of damage that could be done, and I mean that in a positive way with respect to getting into health and wellness, CBD. We're starting to see more licensed producer invest potentially south of the border. So I think that there is a significant growth profile right now for the Canadian licensed producers. It's just more unknown than what that growth profile is for some of the MSOs. You look at Cresco. We know Illinois is going to be legalizing recreational cannabis for January. We know that they're having they have some of the better license and penetration into the state, and other MSOs as well that have done it via acquisition. So yes, there's going to be bumps in the road, and anything that involves something this highly regulated, there's always unforeseen issues, but at least that's sort of the arena they're playing in. We don't necessarily know all of the arenas the licensed producers are playing in, and if you just want to be ultra conservative, and there's definitely a reason to be, and look at the Canadian domestic opportunity, it's very bottlenecked right now and very unattractive with respect to its let's call it near-term growth as what's going, related to what might happen in the next 6 months here. I don't think there's a lot to look forward to other than the initial launches of products and new product forms, which again is going to take us a quarter or two to really decipher once that hits the tape.
Sure. There's a vote by a congressional committee coming up in the United States on Wednesday. And do you think that that Marijuana Opportunity Reinvestment and Expungement Act is going to constitute any kind of catalyst for U.S. companies, at least initially, and possibly some spillover into Canadian ones?
Well, I would think so, hypothetically, but when you look at the sector right now that we're in, unfortunately, it is dominated by negative news headlines, and because of that, even the ones that are positive, there's a bit of capitulation in the space where people might be excited about a potential positive headline on Wednesday, but they're more afraid of what they don't know is going to come out on Thursday with respect to what we saw with Hexo last Friday, and then even before that with pulling their guidance and some of their layoffs. So I think that fundamentally it should matter. Now you have to keep in mind this is a House vote. It's the Senate is controlled by Republicans. This is a co-sponsored bill. This is a bill that I think has 55 co-sponsors, so a long way to go to get it over the goal line there. So nothing's going to happen this week with respect to getting legislation over the goal line. There might be some airtime for it, and it might hit the news headlines, which again is positive if more people are really factoring in that this is a sector that's starting to destigmatize when it comes to political acceptance and state-by-state acceptance, and I think eventually there'll be federal acceptance. So this should be positive for the sector, but I wouldn't hold my breath thinking these stocks are all going to go up 50% on whatever happens on Wednesday.
Right. I've noticed that some of the extraction stocks, MetaPharm Labs, Valens Grow, are looking better in terms of the evolution of their operating statements and everything. Is there a reason to be more attracted, do you think, to the extractors who have focused on both toll extraction as well as developing their own product lines?
I think there's pluses and minuses to both, because right now $1, if I'm an out licensed producer and I sell a product to another licensed producer, I know this isn't the tolling specifically, and I make $1 of profit. To me, that's not as valuable as $1 of profit that eventually gets derived to an end user. So I sold something to a provincial government, made $1 of profit, that goes to an end user, that end user uses it, hopefully likes it, knows the brand a little bit, maybe they know your product skews a little bit more than they did before, and that helps build the brand equity and probably brand awareness. So I think these toll manufacturers, like the companies you mentioned, it'll be more critical for them to implement and execute on their own products. Why I like those names as sort of a near-term investment opportunity is because there's a little more certainty with it. You get a tolling arrangement. We know that it's going to take some time for all the capacity and extraction abilities in the sector to ramp up. So, if you have a Valians or a Labs or whoever, announce certain tolling arrangements, there's more certainty as to what is actually going to be in the print in the next couple of quarters, as opposed to licensed producers, which I think don't even have visibility 3 months from now. I think the whole reason why there's been surprises, whether it's Aurora or Canopy or really anyone that's reported their September quarter now, is you can barely, even forecast directionally whether the revenue is going to go up or down, let alone percentages and margins. So it makes it a lot more challenging. So those names are a little more easier, but I think there's less long-term value for those names unless they get their own independent brands up and running, which they very well may.
Outdoor-grown hemp in the U.S. and cannabis in Canada, as both the year's harvests have demonstrated very clearly that this is super low-cost weed relative to that grown indoors in higher tech facilities. Do you think that these companies in Canada that are growing outdoors on large operations, Weed MD, 48 North, Aurora's theoretically got a large grow that's going to be planted this year, do you think they're going to be in better shape to compete in the extracted product market because of their lower cost of input?
Perhaps, but to me that's all a consideration of timing. At the end of the day, I think this market's going to ramp up. There's going to be probably more capacity than that's needed. I don't think anyone would debate that. The pricing is going to come down. The wholesale pricing is going to come down. And if you are someone like a Canopy or Aurora, and 6 months from now, a year from now, you still have a 20 or 25% market share, that's more valuable to me than being a low-cost producer, because you're going to find those low-cost inputs once we have a saturation of supply and infrastructure. So the Weed MDs of the world, those types of companies that are already trying to position to do themselves today, I think as long as they can translate that into market share to the end user, fantastic. If they still only have 1% market share a year from now, it doesn't really matter what their cost base is. They'll be very profitable on 1 gram sold. With no disrespect to Weed MD, but just companies of the like that still have a ways to go in ramping up their share.
Sure. market in general, the sector in general, has lost now up above 80% in most cases of its value from April highs. Do you think that what's happening right now constitutes a sector-wide capitulation, or do you think that there's still a lot further that the sector could go come the new year?
Yeah, I think sector valuation-wise, we are at a place where I think it's a little more, I mean, obviously it's 80%, like you said, it's a more comfortable discussion to have. You don't have to hope the German opportunity lands. You don't have to hope that an Australian opportunity or a LATAM export opportunity, because there's a lot of optionality with these names. So for some of these names, you can actually look at, okay, what's 10% of the Canadian wholesale value worth if you're sort of a mid-tier LP, and it's an easier discussion to have. The problem with that is there's a lot we still don't know with respect to where pricing will go. Obviously directionally down, but how far down it will go. We don't know exactly how the ramp up in these new product forms are going to shape out, because a lot of that is a function of, as I've mentioned several times, the retail infrastructure ramping up in a way where we can actually get new users into this market. So I don't know if I would necessarily call a bottom here. I think it's an easier bottom to call for the US names, because you're going to have, on a pro forma basis, EBITDA numbers in the hundreds of millions, maybe 100, 200, 300 million next year for some of the leading operators. And if they ever get to a point where their market caps are $500 million or less, I mean, it's a pretty easy valuation argument to make. With the Canadian companies, you look at Canopy, who's effectively a leader in the space, not necessarily on its financial metrics, but certainly in its positioning. And this is a company that very likely, even based on management, a year from now will not have a dollar of EBITDA or a profit from operations. So it's going to be an interesting environment out there when you look at a company like Canopy that has the constellation, has the strategic investment, has potentially international optionality with no profitability, compared to a company that might have a couple $100 million of profitability, albeit in an illegal market, assuming it's illegal still then, and not on a major exchange and without a constellation as a partner in their back pocket. So it's going to be an interesting play. I would have thought it would have happened already, that we'd see some of the U.S. names actually outperform the Canadian names, maybe as an index. We haven't seen that yet, and I think that at some point in the next 6 to 12 months, it's way overdue, assuming things stay as they are now.
Right. All right, Matt, we'll leave it there for now. Great insight as usual. Thank you for joining me. We'll have you back soon.
Great, thank you.